Welcome to CoinShares Talk, CoinShares live stream every month to talk about digital assets and the recent news in finance. I'm joined by Matthew Kimmel in the US and Alexander Schmidt and Satish Patel in UK, in London. Hi guys, thank you for being here.
Hello, good afternoon.
A lot of happened since last time we met each other, especially in the US. Matthew, it's the crypto week actually. We've just seen recently a dramatic turn in Washington with the House finally pushing through multiple crypto-related votes. Can you expand about what's happening right now in DC? Do you hear us, Matthew? I'm not sure Matthew is hearing us.
Yeah, I'll take this whilst he reconnect. Oh,
I think I froze up.
Back. Yeah, Matthew, go ahead. I think you'll have to come back, Matthew. Yeah.
Sorry, can you repeat the question, Jeremy?
Okay, of course, yeah. I was explaining that this is the crypto week currently, and there's like a back and forth in Washington with the House finally pushing through multiple votes. And I was asking if you could explain to us what's happening right now in DC.
I think we lost Matt again. But yeah, I think the Trump administration penciled this week to be kind of a flagship week for crypto. So there were 3 bills being voted in Congress. 2 of them, the more better known, the Clarity Act and the Genius Act. The Genius regulates stable coins, and the Clarity Act will define who's going to have oversight over what in the crypto space, i.e. what the SEC will do and what the CFTC will do. For example, Bitcoin right now falls more under the remit of the CFTC, whereas the other currencies are more of an SEC affair. So it's been a few backs and forths in Congress. Matt is closer to the action, but what seems to have happened is there were a few rebels against the bill in the Republican Party in the House of Congress, and Donald Trump himself apparently interfered. That was Tuesday night, if I'm not mistaken. And so he apparently got the support again of these congressmen, congresswomen. So there was a few indicative votes happening yesterday, and these votes seem to now be going ahead in the US. Matt, I was just giving an intro about what you mentioned about the Genius Act and the other bills that are going through Congress right now. If you have a more up-to-date view on that, that would be, what's happening today, tomorrow.
Yeah, so there's 3 pieces of legislature, right? The Genius Act was about stable coins, the Clarity Act, which is market structure bill, and then anti-CBDC, which is sort of putting set in stone something that should basically already be in place. Now, the Genius Act was something that has already passed Senate vote and passed with flying colors. I think it was 68 to about 30 bipartisan support on stable coins. That was, I think, maybe the catalyst for this crypto week that's put forth in the House. And there was a bit of a kerfuffle at the start of the week where these bills weren't passing procedural vote. But very clearly, President Donald Trump is very motivated to get laws in place relating to crypto. And so he called forth some Congress people to his office that had voted nay and that has since turned around yesterday. So they've now passed procedural vote. There'll be a final vote on Genius today. Some of the things that it does is kind of it sets oversight. It sets who can be an issuer of stablecoins. It sets what the bankruptcy proceedings would look like and reserve requirements, these sorts of things. And there's actually already set a signing ceremony at the White House tomorrow. So everyone is expecting this to pass, even though there was, I believe, one of the longest kind of procedural votings. It took about 9 to 10 hours yesterday in the House, them discussing these bits of legislature. I could carry on and talk about clarity if you want.
What are the concrete implications? I feel that I understand that the back and forth was about the CBDC actually, and then some Republican wanted a more open bill about this possibility. Is it correct?
Yes. So, the House Freedom Caucus, which is a kind of cohort of several Republican congressmen and women, wanted the anti-CBDC policies to be included in the Genius Act. And that was part of the reason why they were saying no in the procedural voting process. It seems like the other Congress people and the president convinced them that it doesn't need to be in. If it was included, it would have had to go back to the Senate, right? It would have pushed this law from being signed probably weeks. That was the reason. It seems like to me the most up to date, and I have to double check this, but that anti-CBDC guidance will be included in another piece of legislature.
And what should we expect from the Clarity Act more specifically?
So the Clarity Act is a market structure bill. And so if you think about cryptocurrencies as an umbrella, right, not all of these assets are trying to achieve the same thing. Bitcoin, very different than Ethereum, very different than Tether, very different than Aave, right? So what this bill is trying to do is have clear guidelines as to which assets would be under the guidance of the CFTC versus the SEC. This means more. Sorry, go ahead.
Yeah, but right now, like Alex said, Bitcoin and I guess Ether goes through the CFTC, and the other one are regulated through the SEC, basically.
Yeah, but there's a bit of ambiguity, right? So Bitcoin is quite clear. It's been treated as a commodity by the CFTC since I believe 2015, right? And the SEC has been very clear that it is not a security, and there's even legal precedent in the court system of it being treated this way. So this bill is more about the rest of the crypto assets. There was, I'm sure you all remember, with Ethereum, how much uncertainty there was and kind of how animosity built up against Gary Gensler because people didn't know, is it a security? Is it not a security? And so, I think it means more for the rest of crypto assets compared to Bitcoin, which actually has, quite a bit of clarity on it for the businesses in the space and for individuals, broker dealers and the like.
All right. So let's wait for the signing ceremony, which is happening tomorrow. Let's move on, and especially about Ethereum. We've seen recently a surge and significant inflows, especially in the US, on Ether ETFs. Can it be explained by this new regulatory landscape, actually, or do you see another reason for this comeback, Matthew or Alex or Satish, anyone?
I think it has something to do with it, right? I think Ethereum, has a very high share of stable coins on its chain, and that it's something that a lot of people discuss, right? Bitcoin doesn't have stable coins, right? That's not its purpose. Its purpose is a monetary system. You send, hold, and receive the asset. On Ethereum and other layer one platforms, like in Solana and Tron and so on, you can issue assets on top of them and applications, right? And so stablecoins have been one of the most adopted and used assets on these systems. And so I think clarity on stablecoins and kind of legitimizing that in the States, as well as potential of a market structure law, is something that has benefited altcoins this week. And then, there's additional kind of market dynamics with Ethereum of these corporate treasury companies popping up, as well as the potential of there being staking and being incorporated into the spot ETFs eventually in the US. And so I think it's a combination of these things, but as well as the fact that Crypto Week is quite tangibly related. And there is a bit of a marketing event that there is even a Crypto Week, right? I don't know if you guys agree or not.
Yeah, I mean, ETH has been having a very, very strong year, regardless of what's been happening over the last week. I think the last week's been perhaps more remarkable, but you see, I've been to a few meetings, to a few events with CoinShares, and people didn't want to talk about Bitcoin. People want to talk about Ethereum. So it just shows what the level of interest is there. I think also Bitcoin seems to have become a little bit, let's put it maybe in a blunt way, less exciting than other assets. It's more established. It's less volatile. It's and a lot more investable from perhaps an institutional view. But if you look into people who are excited and interested in volatility and what crypto used to be perhaps 3-5 years ago, I think Ethereum still has elements of that, and it acting as an L1 as a base for other currencies, I think just makes it even more relevant. And yes, these strategies, these treasury strategies around Ethereum, because it's a smaller market and it's still very large sums of money coming in. SharpLink was buying something like $400 million worth of Ethereum, and that, I think, that moves market a lot more than someone buying $500 million of Bitcoin. So all these things, I think, are combined, and people are getting excited about ETH.
And we've seen a wave of if a strategy company going on right now, like Strategy is doing with Bitcoin or MetaPlanet. Let's talk about Strategy, actually, which is hitting records as well, with over 127 billion market cap. What does it tell about Michael Saylor engineering plan, financial engineering plan, and more specifically, its new offering, STRF? I pronounce it STRF, STRF. Do you have an analysis on that?
I have many views about this topic. So I think, full disclosure, we've been invested in Strategy at the product since October 2020. And we just thought it was an interesting idea. I don't think we ever imagined it was going to become what it became. So makes our life exciting as well. I think they're using a combination of common shares, preferred shares, and I think they are trying to manipulate the equity, the valuation premium against the Bitcoin holdings. So if they want to have perhaps a tighter premium, they issue more common shares. If they want to expand their premium, they issue more preferred shares. The issue that's happening is they have a few billion to issue of those preferred shares, more than 20. And in my view, I think that could become a little bit dangerous for them, in that they can overissue. These are things that generate cash flows on their side, and that would generate some commitment to raise cash somewhere else, be it selling Bitcoin, be it selling equity, or selling more preferred shares to finance those dividends. So I think a lot of people have become less comfortable with that, but it has for sure given them clout, size, scale, for them to reach to get what they are, but the premium has compressed. Last year we were talking about 80 to 100% valuation premium. Now we are at around 60, and it's been compressing actually over the course of the year. So I wonder whether people are still happy with that strategy. I myself, I think I did a math the other day. It's about $60 million annualized coupons or preferred dividends that they have issued so far with the STRF, Strike, and Stride. That's very confusing.
Yeah.
And the cash flow from operations has been negative since Q2 last year. So that money needs to come from somewhere. And I think that raises concerns among investors for sure.
It's said that according to Bloomberg, that Vanguard is actually like the largest holder of strategy. Were you surprised by this news, considering it's said that Vanguard is pretty anti-Bitcoin?
I mean, people like Jamie Dimon says is anti-crypto, and JP Morgan keeps doing crypto stuff, right? You could be anti-crypto, but you can still see an opportunity there to make money. And I think that's what these institutions are about. Strategy has been an incredible performer in 2024, even 2025, a bit less so. So I just think that from an investment management point of view, even if you were against Bitcoin, you can see what could be, in your view, a short-term entry point and way to capitalize this trend. Everybody's talking about it, right? There's a crypto week, and there's Trump talking about this all the time. Trump's children involved with crypto. So I'm not surprised that people even who say they're anti crypto will get in there, because kind of like it's almost like going the bandwagon.
We've seen this week that Cantor Equity Partners One is dealing with Adam Back for a new Bitcoin treasury company. What's your view, guys, on Cantor basically going full crypto, full Bitcoin?
So I as part of our research, I deal with Cantor actually a fair bit. I know the investment banker, I know their research people, and they're very good. And I have to say that they, are top two, I guess, in that respect. So I'm not surprised that they are dipping their toes, or now foot, leg, all the way to their waist, maybe more, in crypto, because I think they are very vested in this area and they have a lot of expertise. 21 has proven to be a success, and if they can repeat that, I would say, why not? This almost sounds like SoftBank, with SVF1 and SVF2, trying to double down on the initial success of the initial strategy. Also, they are very close to the administration, so they know what's going on in the government, and I think that's a huge advantage to them. They're close to government, they're close to corporates. I think they know a lot about what's going on in the space, and I'm not surprised that they're doing this.
Let's talk about now Bitcoin mining, and especially US listed Bitcoin miners which are dominated the space, nearly 33% of global hash rate. How do you now explain this dominance? Is it really the effect of Donald Trump's presidency? Do you think this is sustainable? And how does it reflect also on their stocks price, which is, I do think that it's going quite well right now for Bitcoin miners, but maybe I'm mistaken. Alex, Satish?
Yeah, I can start with this one. So I think there's a few components here. So firstly, Bitmain has been rumored to have a lot of hash rate, so between 100 to 200 exahash, and recently they've been able to channel this into public equity. So I don't know how much of this exahash is actually translated through Bitfufu and Kango, for example, which I guess forms the pool of public mining hash rate. But I guess even if you sort of exclude that, the public miners kind of landscape in exahash domination, let's say, has been quite resilient, and I think that's mostly because their access to capital markets and financing. They can regularly access equity financing or debt by using or leveraging their brand and basically selling a story. So I think from that, they're able to sort of leverage the operational base. They're able to sort of leverage key partnerships or contacts, especially in the US and abroad. And they've had long-standing deals and relationships with suppliers like Bitmain or MicroBT. So I think because of their scale, their reputation, and the brand, especially in the US, they've been able to sort of maintain this, over the years. But having said that, I think, as rewards kind of get halved every 4 years, and by 2035, 99% of the Bitcoin is going to be mined. It's going to get increasingly difficult to sort of make this a profitable or viable business. So I think what we're starting to see is a lot of miners shifting into stranded energy or trying to get energy as close to zero as possible. So that might lead to consolidation in the public mining space, maybe from 10 miners to less than 5. But at the same time, we might have a lot of fragmentation in the private mining space. So that will make it more of a sort of competitive market. It'll be a little bit more isolated, maybe a bit more geographically diverse as well. So yeah, these are some of the trends that we're seeing. But yeah, at the moment, I think the aspects of capital raising and capital financing in public markets is much more superior in this market.
Matthew, you wanted to weigh in?
Yeah, I agree with Satish. I think the future of Bitcoin mining is more stranded forms of energy, more modular container-like setups compared to today, which you have the kind of monolith substation dedicated, right, gigawatt-sized facilities that are higher cost, right? At least in theory. That being said, and the share of miners in public markets, I think, is exactly what Satish said. Access to cheap capital, and then you have the relationships with the hardware manufacturers, and so they can just continue to run a capital intensive business and scale. I think we have 4 public miners now that have over 50 exahash. And so that's pretty concentrated. That's a lot of hash rate in just a couple companies, right? But I do think part of what is supporting this, as Satish was talking about, is the Bitcoin price action. So hash price, which is like a measure of network-wide mining revenue, is around the high water mark for the year right now. That's despite difficulty being at around its all-time high, and the fee market on Bitcoin being quite dry. Not much activity in the transaction market on Bitcoin, right? So it's very driven by price action. But in the short-term horizon, it's very lucrative if you look at the last couple of years, or last about a year and a half since the last halving, for Bitcoin miners. It's a very favorable environment. But if you think out from here, maybe in less of a positive price scenario where it's sort of Bitcoin starts to stall out, or post-halving, right, where the supply being released to miners is cut in half, and if the fee market doesn't pick up, I think we'd start to see more consolidation. I think we would start to see more pressure, right, on miners that are higher cost, or on the higher end of the cost curve.
As you said, for now, it's pretty lucrative to mine Bitcoin. And according to another asset manager, Van Eck, actually, there are some reports about excessive executive compensation at public miners, which have, sparked shareholders' backlash. Do you guys see that as a red flag for the industry, or is it like normal business as usual?
Yeah, I mean, I've done some work on that in the past, and it really depends. It varies according to from business to business. I think there is some overly compensated management teams. Yes, that's for sure. But I think this is a nascent industry in which a lot of it's not a mature industry. So these companies have not yet been through ups and downs and enough scrutiny for them to behave in a certain respect. I'm not defending this kind of behavior, but I'm just explaining that this is what happens. So governance, I don't think it's still there with top level companies that have been listed for decades on New York Exchange and NASDAQ or London. So yeah, that will happen. We try to sift through that, but then we do care. I think a lot more meaningful is the sustainability of the business as a whole. If they are mining at a very low cost, if they're mining with very up-to-date machines, and if the capital structure is responsible, I think that those are items that have a much bigger weight than exact compensation. Yes, it is an issue, but given the size of the universe as well, I don't think you can entirely get away from those companies that eventually abuse their power.
Before concluding, I just read that there's now a Dogecoin treasury company that is going to be listed in NASDAQ. Guys, what could go wrong? Okay, no comment.
Right?
Sorry?
Did you say what could go right?
Hey guys, it was great to have you. Thank you for your insights. I wish you a great summer as well, and see you very soon. Take care.
So,
Thank you very much.
Jeremy.